I know, right? Two live streams in the same day? What is going on? Well, as you know, I mentioned today that the rest of this week, when I live stream, it's only going to be an hour long. So I want to take the opportunity to kind of like review briefly. It shouldn't be too long, I promise, a couple minutes. The action for today and go over some salient points. So that way I don't have to do it tomorrow morning when we first start the live stream. So we can just go right into it and pick up from whatever the market's doing at that time. So we have the NASDAQ. This is the daily chart. And if you recall, go back on the 13th of July. I'm sorry, of August last week. At the end of the stream, the last, I guess, quarter in terms of the length of the stream, I went through the process of going through the higher time frame. I think I touched on the weekly chart, but if not, I know I covered the daily. And I went through several levels. I said that, while we were on the 13th right here, I said longer term, we're reaching higher. So I'm not trying to pick the top in that. I mentioned that we would be reaching for mean threshold of this up close candle, extend that through, we hit that. I said the liquidity resting above here, and then I took your attention right in here. And we had this SIBI here, which we had a complete closure of that today, right at the close. So this candle's low, right here, this one. If you look up at this value upper left-hand corner, that low comes in at 19,868.25. Today's high, 19,871.75. So we cleared it. Okay. And this little shaded area in pink, that's where I think that we'll try to still reach up into. It'll be interesting once we get into this a little bit. It can go there and touch it and probably have a nice little retracement. I'd like to see it completely overlap the difference between this candle's close and this candle's open. So where there's no body, it's just a wick. Let's see. Okay, see the difference between this candlestick's body and this candlestick's body? It's only got one wick in here. That's a volume imbalance. You'll see and hear me talk about that at the end of the live stream last Tuesday. So in terms of bias, okay, we have been anticipating, we have not been looking for lower prices. We have not been calling lower prices, but I've been looking for intraday opportunities to push, by example, to my son Caleb, what could frame a exercise like a practice session on how to read, interpret, get a feel for how far it can run, develop an eye and a knack with experience on fair value gaps and drawing to relative equal highs or relative equal lows, and also getting a feel for the session bias, which is going to define both the buy side and the sell side, which is always what I've been teaching. And whatever one of those liquidity are taken first, usually the opposite, it goes for that. Okay, so we had another example of that today. I went through the business of showing the, give me a second, I gotta go through the series of all these. I want to put my drawings back on, I had to delete it that way. When we drop back down in, all these levels will be pertinent. You'll be able to see them all. So I'm going to drop into a 15-minute time frame, and you can see today's action right in here. That's where the institutional order flow entry drill was called real time. And then, if you recall, watch the live stream. It was a rather long one today, but Caleb is not going to be able to keep up if they're like that all the time. I know some of you are like, just keep going. I'd like to, I really would, but I don't think it's going to help him if they're all that long. So I talked about some of the things that lead to holding on to a trade longer, and what promotes the ideas of sticking with the trade, what are problematic conditions that end up materializing in trades while you're watching price, or whether in a trade, if you're demoing it, paper trading it, tape reading it. And I covered a lot of really, I mean, if you don't watch today's stream a few times and take a lot of notes from it, I mean, I had a lot of time cutting up today, obviously, and I enjoyed that. I had a few people send me some comments saying, I don't mind the bad language, but could you not say this particular word? I'm not really trying to filter myself, because if I did, I would never get through the presentations. And I'm not proud of the stuff I say. They have to be organic. And it's not something that is a big deal. You shouldn't have your children listening to me while I'm doing it. So we're all adults here. I know one of the ladies in the listening audience told me she doesn't like the B word. I said some nasty things today, and that's the word she didn't like. So I apologize, ma'am. I don't mean to be offensive with the language, but sometimes I lose control of my tongue and I go off the rails a little bit. But that's part of the carnival-like atmosphere around here. Not proud of it, but that's, it's unfortunately what happens. The live stream today, I gave you a drawing, and I probably should have drew this out before I started the stream, but you know what? I like going out here without a safety net. So I mentioned how if we understand the elements that are being taught, and if we're looking for just setups intraday in the beginning, it's easy to lose sight of, well, you're never really going to make big money or really grow the account or have these extrapolated risk to reward model returns if you're always just trading in these small little intraday moves. And my response to that question that has been coming my way since I actually started the 2024 mentorship here on YouTube, I have students and traders and those that are just casually watching every now and then just to get a feel for what is it that we're doing here. And they questioned, how do you use this information outside of an intraday chart? Like, I want to trade bigger moves. And also I segued into helping others that were asking questions such as, how do you hold on to the trade? Like, how do you hold on to trades that keep moving and not get stopped out, not get nervous or whatever? And it starts by the same process of what we've been doing here. It all starts there. So if you've never really had a way of going in through the content and having a beginning point, this is the beginning point. This is because this is the best beginning point that I can create for my son. So if it's good enough for him, it's definitely going to be good enough for you. And you're none of my flesh and blood. He is. So if I'm pushing him through this perspective, this approach, this pathway to understanding, then that's your best answer for those that are asking where to start. So I covered how if we understand what the market's trying to do, initially we want to frame buy side and sell side. And then if we have what I have held on to this entire mentorship, listen to the commentary. On a higher time frame, we've been anticipating and looking for higher prices. That's exactly how I did my mentorship when they were paying me. And I would give them analysis. I would point to higher time frame levels, where the market's going to reach for. And then all they have to do as students is look at the lower time frames and anticipate when it has completed its run on opposing liquidity, and then get in sync with order flow that would get them in sync with the higher time frame analysis I would share on the weekly and the daily. Those elements, I was in the high 90% bracket in terms of accuracy. And no student came forward and said otherwise or proved that I wasn't. You are going to be finding trades that are in that mindset, that framework, that bias. Okay. But I don't want Caleb to think that that's the only trading opportunities. Because if I lock him into just that, it it won't give him the opportunity to understand how even retracement intraday can be traded against that long-term higher time frame bias. And it also teaches him by default by being able to see these retracements intraday that would be opposed to those long-winded runs higher or lower on the weekly and daily chart. It gives him, or it will give you also, the comfort of knowing that it's just a retracement. It's not changing anything. It hasn't upset the underlying, premise of the market moving on a higher time frame significantly higher. So I drew out this idea today, and I was talking about how if we're trying to enter and hold on to longer term moves, and I see a lot of live streamers out there. I don't hate any live streamer. I didn't get any comments or whatever, but a lot of my students understand that I have a fun relationship with one or two YouTubers on the internet, and they take shots at me, and it's fine. It's just shop talk. I don't take anything personal against them, none of that stuff. But I can take a good ribbing, and I like to give it out too. And I hope when they receive it, it's understood that I'm just having fun. I don't mean it mean spirited. And sometimes their tribe, their team, they get all bent out of shape and they think I'm trying to be mean to them, and it's not. I'm actually trying to encourage them to get better, and I actually mention them by name in my live streams or in my videos to kind of like prod them, saying, "Listen, I'm thinking of you right now. Listen to me, and you'll be better. You'll be better at what you're doing." So I talked about how the Power 3, which is my solution to a conundrum that Larry Williams said he had back in 1995, at least during the time when he made that video series, the Confidential Trading Course, or Futures Millionaires Confidential Trading Course. I think that's what it is. It's a 4-tape VHS tape thing, and that was my go-to for encouragement. And as I mentioned in the live stream, he found it difficult at that time. I don't know if he's ever gotten better at it, but he said it was hard for him to be a buyer below the opening price when he was bullish. So he'd always use buying on strength. And to me, that was my opportunity. So I've taught today, and I taught at other places on this YouTube channel. Just look up Power 3. And you can see how I've answered that problem. Okay, I have a very systematic approach to doing it. Today I proved it, I outlined it, I told you where the buy was, I told you how the day would transpire, how to hold on to it based on time. And we're going to take a look at some of those things today, but I want you to go back and listen to the live stream. You'll hear me outline these things and how this is below, that little area right there is below the opening price at 930. But just think about how that little part right there, that's basically the 930 first opening price. And then any movement down away from that is to be viewed as Judas swing or a fake move. It's to get people thinking it's going to drop, keep going lower. And then all of this move here is the trend following portion of the move. It means it's all directional, it's all one-sided like this. Okay. And then at the close, price will come off the highest high and settle off the high. Okay. And I counseled you today on the community tab of my YouTube channel. I said, okay, it's after 3 o'clock. If you have not taken anything, you want to pay the trader to take something off. Why? Because at 3 o'clock, that starts the last hour of trading. The last hour of trading is right there at that low. Just happens to be inside of a fair value gap. And then we have this protraction towards the close of the last hour. So at 3:30, we start this candle. It spools up into that little blue line, which is the close of the daily sell sign imbalance, buy sign inefficiency. And this is that volume imbalance on the daily chart. Those are all levels that were talked about last Tuesday. But because they're higher time frame, we don't constantly have to refer to them every single day. You just have them on your radar, and that's where we've been anticipating price to reach for. So for the yahoos out there saying that I'm calling the bias lower, I'm looking for shorts, I'm looking for longs, but I'm looking for things to teach my son how to engage, and all of you that are watching, anticipating price action, seeking liquidity, opposing liquidity against that move that would be tearing us up into here. Anytime it drops lower, it's done what? It knocks out long holders, scoops up their position, uses their stop loss that's below old lows to buy, and it gets them in sync with this underlying run. So we're going to take a closer look. Just remember, this little diagram represents one daily range, and I wanted you to anticipate the daily range starting at 9:30 here and where we close here at the end of the day. All right. Now, with that in mind, let's dig into the chart on a 5-minute basis. All right, so here's 9:30. So disregard anything to the left, okay? Just don't look at any of that stuff. Pretend it's not even there. You're focusing on just this candle right there. That opening tick that's right on that line. We drop, we go a little bit above the opening price, and then we drop once more, go a little bit higher, and we drop more, and we take out the low here and that low. See how those relative equal lows there? We drop lower, and then we started the whole idea of, as I outlined, I don't want to talk about what I looked at during the live stream because you go back into that and watch it. We were one-sided. We were anticipating the buy-side liquidity resting above these highs right here. But while we were down in here, and while we were anticipating the run up, I was outlining how being a buyer, and if you want to hold into trades with a longer term target, where it makes you a whole lot more handles, a lot more pips, a lot more points, if you will. Buying at that opening price or lower when you're bullish. Last Tuesday, I solidified it and made sure you understood that this is where we're going there. As long as we don't have a major wipeout and go lower, and that would be caused by something occurring over in the Middle East. And just go watch the stream, you'll hear me refer to those things. But here, that point of entry right there is the institutional order for entry drill. And we rallied up above what? The new week opening gap high for this week. So Sunday 6 p.m. opening compared to Friday settlement price. That is your new week opening gap. We trade down, then rally, and start to build all of the same aspects of looking for higher prices that we walked through today and have been going through every single day since we started the series on the 2024 mentorship here. So, by the way, Flux, a gentleman reached out to me, sent me a instruction about this. Thank you so much. He made some changes to an existing watermark. So that's what you're seeing here. So that's the business there. So if you want to have that on your chart, I guess there it is. But we're going to talk about how it reached up into this because I'm sure a lot of you were taken by surprise. I had a guy on YouTube. I guess he wants more followers or more attention, but he made a video about me a couple days ago, and he is supposedly an order flow guy. And he uses like the depth of market ladders and whatnot. And he went so far as to say that what I'm teaching, what I'm saying is ICT is a scam, and here's why. Well, I was watching a little bit of his live stream that he was doing today, and I invited a few of my private students to take a gander at it, and some of them did not listen, and they were trying to stoke the fires, and it's not what I wanted to see happen. But while he was watching his price action and stuff, I was going long in the ES when he was saying it was not going to make a higher high, and basically I mopped the floor with it and showed the students the contrast between what was expected because of looking at depth of market, the ladders, where the orders are stacking above and below, and how that's supposed to be superior intellect and knowledge. And the whole time there was nothing being mentioned about where the market was going to go. In fact, it was said that it wasn't going to go higher. And I said, well, that's perfect because I see a breaker on a 15-second chart. I see liquidity. I see a run higher, and I see it doing exactly what I outlined in my live stream today. And it accelerated, went through the roof, and blew the top off of it. And I say that because there are some of you that are watching me just for the sake of saying, this is wrong, there's no algorithm, but there really is. And the algorithm is the price engine that offers the price. The buyers and the sellers have to agree at the price that's being offered. It's not the buyers and sellers that's offering it to you. The commodity, okay, the thing that needs to be purchased or sold is price action. The price, the next price, that is always offered to us as traders. It's first piped into large top tier institutional banks and lending firms and things like that. And then we get the opportunity to pick up the scrapes and bottom of the barrel as retail traders. We're the last line in the expected recipient of this price. There are entities out there that have a better opportunity to take the price that's offered to us. Like we have the scraps, basically. And the argument and the excuse is this. The algorithms are fighting for a quarter of a second in terms of time execution. That's not a big deal. That's not a big deal. And the argument is discounted because you can't throw thousands of contracts inside of a quarter of a second. Look at the time of sales. There isn't that many orders coming in. In the same token, when you're watching a depth of market ladder and you're seeing all these orders, the market's going to keep booking higher or lower if it's designed to do so. And I outlined today, just like you see it right here. I told you once it starts going up and everything below the opening price at 930 was the premise, what we're looking for. And I outlined that right there on a 1 minute chart. And if you didn't watch the live stream, stop this one here. Don't watch anymore because it'll take away from you watching it happen live. The worst thing you can do is look at this one here and not have watched the live stream because you'll miss the opportunity as it's forming, as it's really forming live, because you're watching the real-time data that I'm using while I'm doing that live stream with a 3-second latency. It literally was only taking 3 seconds before it was posting to my phone and my headphones. So I can't make it any faster than that, folks, and that's the settings that's offered to me. Low, ultra low, low, and then normal latency. That's the 3 options. At least that's what YouTube offers me when I'm doing live streams. Right now, I'm doing normal because it's not time sensitive. So when I say something, if you look at the seconds down here, okay, from the time I say something and you receive it, if you're watching your trading view time, that's the latency. And it should be a little bit longer right now because it's not time sensitive. The markets are not trading. It's 5 o'clock. So there's no movement. I can talk with a low latency and it's not a big deal. I cannot do closed captions when I'm doing the ultra low latency. So it's not for the sake of not wanting to do it. I just can't do it because they don't let me do it on YouTube. So don't take my word for it. Try to do it yourself and you'll see what I'm talking about. So I want to drop down to the 1 minute chart. Again, if you didn't watch the live stream, don't watch any more of this one. Stop it and come back to it after you've done that, okay? So let's drop into a 1 minute chart. All right, so we were watching price rip lower. Here's 930. Right here. We dropped lower. We were looking for the new day opening gap. It trades through it, comes back up. We had an opening range gap in here. I'm not going to have that on the chart. I'm just going to go to the most salient points of running that low out there. And then I told you I want to see it get above the new day opening gap here on the 16th. And then I want to see it trade down. It does so there. And then we had this move with this candle. I outlined the institutional order flow entry drill. And as it did it here, I said, now, if you're looking for a way to hold on to trades, that part's easy once you've done these types of drills for months. Not a couple days, not a couple weeks, but for months. Because you're not going to fully appreciate where these setups are forming relative to the 930 opening. Right here, right there. So at that price or lower, when you're bullish, when you're expecting higher prices in the daily chart to keep pressing higher, Look at last Tuesday's live stream on the 13th of August, 2024. It's the latter portions before I close the stream. I go through and I said this, so you guys know what I'm expecting based on what we have right now in the charts. It's going to go higher, and these are the levels, and I walked you through them. Okay, we hit several of them already, but we're just below that volume imbalance on the daily chart. So I counted you in the live stream today to go back to that and listen to the higher time frame levels. Those should be on your chart. They should be in your notepad next to your computers or computer or whatever it is that you're using to watch price action, and constantly refer back to, are we seeing indications that those things are still being traded to? Are we marching towards those daily and weekly objectives is basically what we're getting at, because that is higher time frame order flow. That's where ultimately the daily chart's going to try to gravitate to. Now, I mentioned today that there's the Jackson Hole symposium. If you do a search on your economic calendar, you'll see it. Okay, I think day 1 is Wednesday, day 2 is Thursday, and day 3 is Friday. Because that's occurring, and it's on the latter part of the week, you have Wednesday, Thursday, and Friday. Treat it just like a non-farm payroll week where you have to trade on Monday. Staying with it, looking for the setups, and then because we are expecting those higher time frame targets that I mentioned on last Tuesday, August 13th, 2024's live stream, at the end of the stream, I gave you every level that's pertinent on the higher time frame outside of the intraday charts. And those are like magnets, draw institutional order flow in on those higher time frames. Smaller time frames, as you've been watching me do, it's very, very similar to what we expect on the larger time frames, just you get a whole lot more opportunities. So as I outlined today, this is an institutional order flow entry drill. It is the low risk buy. That means it should not come back below that, and it should just keep pressing higher. And we use the new week opening gap here as support. They swept through it, cleared up some of the inefficiency into the order block right there. There's 2 of them, so you're using that price right there at the open. So that's a change in the state of delivery. Boom. Now we're rallying. It comes back down to engage that order block and upset any perfect delivery to the new week opening gap. Because remember, they're like our children coloring inside a coloring book. They can color outside the lines. We encourage that. We want to see things like that because it gives the opportunity to let the wicks do the damage. That's what you want to see. And then, because we were below the opening price at this institutional order flow entry drill, I outlined time. Okay, I outlined time. If you get something like this position entry here, you do not strangle it by running your stop loss up. You don't try to keep moving it higher, moving it higher, moving it higher, but you do expect it around 11:30. That's beginning the lunch macro. It will start to drop against the existing movement that took place in the morning session, meaning here you go, it rallies up. And here is 11:30 right there. So at that moment, looking backwards, was it everybody making money on a long or everyone making money on the short? Clearly, everyone's making money on the long. It's gone up longer. It's been up. It's definitely above where we were outlining it live. So what is it going to do? It's going to seek the initial low that you're going to come to. Here's 11 o'clock. For the folks that don't know my macro for lunch, I'm teaching again. So right here's the price. So you want to go backwards and find the first low, but it has to form after 10 o'clock. So let's do the math on this. Here's 10 o'clock. So yeah, we have a low down here. That's not what I'm talking about. Oh, well, we have a low over here. That's not what I'm talking about. Right here is 11:30. And you want to go backwards and find the first low, and that's this one. Did this low form after 10 o'clock? Absolutely. It's 11:17. So at 11:30, the macro will start doing what? It will seek liquidity that's trailed on that which has been profitable during the morning session. At 11:30, go back to 9:30. What has happened? The market's rallied. It's going up. So the algorithm will seek what? The stops right below that low. Well, wouldn't you know it? As chance would have it, as coincidence would have it, all the planets aligned, the clouds parted, and here we go. It worked again. Not only is it taking out that low, for anyone that's trailed their stop loss right below here, it's engaging the new week opening gap for this week. That's a reasonable expectation. It's going to gravitate and draw in price to cause more interest. So the algorithm doesn't know how many contracts are being traded. It doesn't need to know. It just needs to know what time and where. That's what price is offering it. It does not need to track something as dynamic and what can be spoofed, because you can put orders in and then pull them. Institutions do it all the time. In fact, large investment firms, Goldman, JP Morgan, all these big guys, they've all gotten in trouble sometime or another spoofing, putting big blocks of orders in because they know yahoos out here look at that stuff and think, oh, it's going to go there. That's not how it works, folks. That's like laying down bait for rats. And some of you act like rodents and you go after that cheese. And you think that because that number is flashing there, it's going to drive the market there. That's not what goes on. I explained everything today, and I didn't need to talk about depth of market. I didn't have to show you a ladder. I didn't have to do anything. I spoke on the premise of time. So I told you that we're going to see it drop down for the lunch macro and upset sell side. And I explained, not just today, right now, but in other instances where the lunch macro starts at 11:30 and it can go as long as 1:30. It could keep going higher and not have any retracements. But if you start to see it sell off, all you have to do is find the first low at 11:30, start going backwards. Where's the low that you're going to come to first? But it has to it has to happen to have formed after 10 o'clock. Why? Because it factors in any run that was created for silver bullet, any protraction in price action that's going higher. It allows you to get the obvious where everybody wants to jam their stop loss to. And that's this one right here. And that's exactly where it went to. And it also agreed with new week opening gap. See that? And then it rallies. So we have all this consolidation. We had sell side taken. And then we entered the 1:30 time right there. That closes the lunch macro. There's no more time aspect that's associated with going down to take the stops in this case. So now what is it free to do? It's free to start going in the direction from the early session lows and outlining that daily candle where the open is near the low and the close is near the high. I told you that you would hold on to the trade if you do this, okay? I specifically called out Patrick Wheeling because he does a lot of these. And Pat, please don't. I'm not trying to be an ignorant person to you right now. And if you like Patrick Wheeling and you watch his live streams, I'm not trying to take his followers. I'm not trying to get you to watch my stuff. I want you to think about what I said today, okay? And I tossed you a bone. If you start doing this and you just let one contract go, just let one go with the things I taught today, you're going to have bigger runs. You're going to have huge runs. And Tanja, who is one of my students who has now shown several times of making over 100 handles. I think she's the only one doing that like right now. So this lesson helps her as well. It helps all of you. I want to see all of you do well. If you have the interest in live streaming, like I would really get my rocks off if I saw people taking these types of trades down. And I gave it to you today. I laid it on a silver platter. I said, hold on to minimum 315. Why? Because that starts the last hour's macro. There's four macros in that last hour. But I told you it starts at 315 and that one runs to 345. Then you have one at 345 that goes to 4 o'clock. That's the one that we're going to go into and talk about now. So the market rallies up during the 2 o'clock hour, continues higher, and we have a little bit of retracement here going into 3 o'clock. And I said on my community post, I said it's after 3. It's basically time to pay the trader. If you have held on, and I had people that listened today, they've been very upfront and showed me that look, I made it a killing today. Thank you so much. I don't want you taking trades based on what I'm saying, okay? But just know that I was in rare form today, and I guess that inspired a lot of you to do a lot of you to do it. And the reaction is WTF. This is the biggest trade I've ever made. I can't believe this. This was like nuts. Yeah, that's what happens when you're trading the daily range. That's what my son Caleb is going to grow into. He doesn't have the patience and doesn't know what he's doing yet. But for the folks that know what I'm referring to and have done this for a long time, studying with me, you took the hint, hint, nudge, nudge stuff today to the extreme and held on to it. And you were able to capture a lot of this run today. When we looked at that little crude diagram that I drew out this morning, referencing the daily chart, the daily chart is basically what you see here, where it went up to the high, and then at the close, what's it going to do? It's going to settle off the high. So here's the close, here's the high, and all the way down here is the low today, and that was me telling you that's the low risk buy. And then submit to what? If you want to take longer trades, you have to set your mindset on the time. Time. If you understand Power 3 as I teach it, the highs, and here we are trading as the market opens up at 6 o'clock, trades right up into that volume imbalance on the daily chart. So we've already hit the low. If it never goes any higher than that, it's delivered based on what I told you last Tuesday, using weekly and daily charts. That's bias. That's bias. But intraday, for my son to learn how to do this and how to get that same understanding that I'm sharing with you, you got to go through what I'm teaching here. If you're going to hold for bigger runs, the first and foremost thing is you have to submit to the time that's required for the daily chart or daily candlestick to form and close. So if you understand that we're bullish, as we are indicating today down here, I gave you the schematic of what it looks like on the daily chart, what to expect. So for you to hold to the close, you have to hold into that last hour of trading, right? And then you also give yourself time when 345 comes. Right there's 345. So what happens is the algorithm will refer back to what? Levels on a daily chart, levels on a weekly chart, and any time frame cycling through less than daily all the way down to the seconds. And it'll cycle right back up. And all inefficiencies will be incorporated, all liquidity will be incorporated, and that's how the algorithm gyrates and moves up and down. It's not buying and selling pressure. And I don't give a fuck what Tom, Dick, and Harry says. Tom, Dick, and Harry got it wrong in front of me today and got it wrong in front of my students, and I was doing the opposite of them as they said it. Whatever they said wasn't going to happen, I went right in there using what I teach, what I use, and it just like that. I was long in the afternoon in ES. Everybody else that supposedly uses this volume imbalance bullshit and depth of market stuff, they had no expectation of what was going on, had no idea. And all of this run here, that is algorithmic. It starts at 345. What is it going to spool to? Remember, think about you're that fishing pole holder. You're a fisherman, okay? And you're going to cast your lure to what direction? This level, which is the high of the sell side imbalance, buy side efficiency on the daily chart that I gave you last Tuesday, and the volume imbalance. So you're casting your hook in that area. Why? Because there's liquidity up there. And the market traded right into it here. That's what that pink area is. That was from the daily chart. It went and hit it just like that. So I gave you on Tuesday where the market's going to gyrate and gravitate to on a higher time frame perspective. But that's not to say that you can't take shorts intraday. You can. But I promise you, you did not see anybody else call out with detail as to why over 200 and some handles would be delivered. You didn't see that. It didn't happen. You saw it here. And the logic that I used is what's in this mentorship and every other lecture on this YouTube channel for free. So I don't know what else to say except for if you keep at it, you keep showing up, you'll get what you're seeking. You'll get it. But you got to give yourself time. Like I tell my son, you can't force it. And over time, you'll get it. You'll find things that are going to be a little bit confusing initially. The more time I spend over the charts, it'll make more sense to you. But this run here is absolutely algorithmic. Why is that happening? When are certain algorithms more prone to create big runs? Well, the last hour macro, obviously it starts at 3:15, and that one runs to 3:45. So in and of itself, you have that 30-minute window. And I'm looking for something that's going to cause the move off the high. So like here's the highest high of the day. And then you get this. That's the part that is the 3:15 to 3:45. 3:15 to 3:45 macro gets disregarded, and they use 3:45 going into the market on close. Market on close is that last 15-minute window. It's not 10 minutes. It's 15 minutes. It's 3:45 Eastern Standard Time to 4 o'clock. If it's earnings season, there will be an algorithm that fires at 4:01. And then you get this crazy run going into 4:15. And then when the regular session closes, electronic trading goes bonkers. And then you see some wild stuff. Okay. And I made, I think, a little less than $20,000 with a live account with AMP using that information I just gave you and shared it and showed it and proved it. So there you go. This occurred because of what I mentioned today. The Jackson Hole Symposium, like I said, it can create volatility. And folks that know that, we're getting the opportunity to see a lot of volatility. They want to hurry up and get the run over with, basically. So the folks that the kind folks that run the market and are the fine makers of algorithmic trading, they were happy and nice enough to deliver what we were looking for on last Tuesday's objective long term. It's delivered. Any more run up into this area here that's shaded in pink, it's just a bonus. I don't need to have any more delivery in price to be right about it, okay? And since that volatility that's going to come by way of Jackson Hole Symposium, it's a group, it's a meeting. It's like a big builder beer meeting where they come around, it's a big circle jerk, and they think they run everything, and they certainly try to do it. So because it can create volatility in the marketplace that may be unfavorable, everyone that knows what's going on, as I'm outlining it to you today, and teaching on this lecture series and all the lecture series prior to it on this YouTube channel, having that big run up is reasonable. You think it's a fluke that I mentioned the Power 3 and told you to hold on to at least until 3:15 today? Go back and listen to it. It's there. So you're not going to worry about the little fluctuations in here and completely try to get out because that's the end of the day. No, they're going to drag this thing across the entire spectrum of time, which is taking you into what? The last few moments of trading the regular session. That's 3:45. And they ran us up into right there. They close in that SIBI on the daily chart. Let me take you up to the daily chart and then we'll be done. All right, this candle's low. That's what that blue line is attached to. This is the SIBI, sell sign of balance, buy sign of efficiency, and that would be the low. So as I mentioned on last Tuesday, we have the mean threshold of this candle here, then the rejection block, then we have the buy side liquidity here, and then we have that candle's low, and we have the volume imbalance between these two candles' bodies. And then naturally, if it wants to go through that, you have the buy side here and the inefficiency there. Ultimately, that's, unless something breaks out in the Middle East, I think we're going to be revisiting here. And after we go there, I don't know if we make a higher high. I don't know if we start ranging for a little while. I don't know if we drop. I don't know. Okay. So those are the levels I gave you last Tuesday. They still hold true. This is still what I'm looking for. But as a objective for this week, I'm content. So at this point, I would favor continuation in what's being here, what's been shown here, but I'm not forcing anything. So in other words, if I take a trade, I'm not going to go heavy-handed. I'm not going to be doing 10, 15, 20 contracts. I'll do 1, 3, 4, something like that. That's my high end now. Because it's already done the majority of the move that I was expecting on a daily chart. I mean, think about it. Let's take the lipstick off for a second, and then I'm done. If this is what we've been seeing, we haven't had a down close over 2 weeks. That's unsustainable. That's unsustainable. Okay. So to me, what I think is they're taking out anyone that's short here, and they're taking us up into this inefficiency because it's a strong inefficiency. It's no real volume in there. And maybe we'll get up into here. And probably folks that see that here, they'll think, well, we're going to go for the higher high. And that would be the good area to pull the rug out from underneath everything and send this thing right below here. If Iran, Israel, and the coalition of other Arab nations come together against Israel, and then the U.S. gets what it's been wanting for a long, long time, an excuse to do a theater against Persia. Okay, so that's what I'm expecting. That's what I'm anticipating. That whole run up is because we didn't see it pop off yet, and I think we take out that low if it really kicks off in the Middle East. Otherwise, everything I said here is what I'm expecting. Using that information, if I'm taking longs intraday, as long as these targets are still in play, that means I'll do the heaviest handed positions, the most contracts that I'm trading, not over leveraging, not trying to be more than I'm supposed to be, but the larger positions are going to be on the long side because I'm trading inside of daily bullish order flow. But if I'm shorting, I'm going to do it with small position sizes because I'm going against this. If we start things on a very extreme level over in the Middle East, it's going to be easy for the market to have big, large range candles down on the daily chart. And it might start off with one big one like that, and then wait a day or two, and then start looking for lower prices should that happen. It's not going to be able to rally if something really breaks off over there. If we start exchanging with Israel into Iran, these markets are going to have a real hard time having green candles. And it's going to be a lot of this type of stuff here. Okay? So I gave you sentiment. I gave you what I gave you last week, which was my bias. It was long term. It's delivered again. So you should feel comfortable. Okay? You should feel comfortable that you're learning what's working. You can see that I know what's likely to occur. And you're in good hands. I got this information from good hands above, and I'm sharing it with you. I want my son to learn it. So if my interests are for him to learn it, I'm not going to give you watered down, not so good information. It's the same stuff that I'm laying in his hands. So you see it working. It's precise. It's highly efficient. It's highly precise. Not just close, it's highly precise. And it's in my interest to see you do well with it. If you're going to take the time to invest in it, then obviously it goes without saying that you should be encouraged and trust that you're doing what's necessary. There's no other shortcut to it. There's literally no shortcut. I would not be out here making this stuff for Caleb to go through if it was an easy 1, 2, 3 step-by-step list that just makes it so much easier. You ain't going to get to the level I'm showing you on an easy 1, 2, 3. It ain't going to happen. But if you want these types of results in terms of knowing where it's going to go, how it's going to behave, why it's going to behave in certain weekly profiles, weekly conditions, daily profiles, how do you know when it's going to be a big up day, classic buy day? Well, I outlined it today. I give you those terms. I told you what to look for and proved it right in front of all of you with literally 2 handles of drawdown. So, given the volatility that we're experiencing, I think that's pretty remarkable, if I do say so myself. Good job, ICT. Thanks, brother. So anyway, I will be back with you all, Lord willing, tomorrow. Again, all the sessions the rest of this week are just going to be 60 minutes, so we're going to be aiming for 9:30 to 10:30, cutting the stream after 1 hour because I got to give my son a chance to catch up. He's getting a little frustrated that he's not where we're at. And I told him, don't worry about that, but you know how kids are.